My name is Darryl Kwao. Great to be with you this morning. First up, depreciation of the cedi slowed down last week as the local currency lost only 1.28% on the retail market. Analysts are, however, anticipating mixed performance this week. Here's more in this report.
With the International Monetary Fund program taking shape, it is expected that demand for the local currency will ease. The cedi came under severe pressure 2 weeks ago, losing nearly 9% in value in the retail market. However, VES are seeing slowdown, keeping the year-to-date loss at a little above 12% to the American greenback. But on the interbank market, the cedi has depreciated by about 20%. The World Bank Country Director to Ghana, Pierre Laporte, last week indicated that the Bretton Woods institution would likely disburse $300 million to Ghana in September 2023 as the first tranche of about $1.1 billion budget deficit assurance under the IMF program. Thus, many market watchers and experts believe will help reduce the expected pressure on the cedi. Ghana in December last year suspended payment of external loans to help restructure its debt, a move that significantly reduced foreign outflows.
Meanwhile, the cedi going for 11 cedis 70 pesos to the dollar on the forex or retail market. The pound is selling at 14 cedis 58 pesos, and the euro going for 12 cedis 50 pesos. Now, an International Monetary Fund mission is expected in town this week to track the progress of Ghana's program. This will afford the team an opportunity to see whether the government is on course to meet the June ending target to aid fresh disbursement. There's more in the following report.
This is not a review of Ghana's program, but interestingly, it is coming a few weeks after Ghana secured the 3-year program with the IMF. Staff want to use this visit to find out how the country is progressing on those structural and quantitative reforms that Ghana is expected to implement under this program. For some, this visit is very important because when the IMF staff carry out their first program review in September this year, or even November, they will use the end of June indicators to make a judgment on whether Ghana has passed its first review for the second tranche of funds to be disbursed to the country. There will also be some consultations with government on whether it is struggling to meet some of the conditions. The mission visit will also afford the IMF team an opportunity to embark on another round of engagement with organized labor and the Finance Committee of Parliament on Ghana's program, to ensure that it get more stakeholder buy-in. The IMF staff will go to the board in November this year with this report on Ghana's program review. If it should pass that test, the board will go ahead and approve the second tranche of $600 million to be disbursed to government.
That report was filed by George Yaffe. Now, the General Agriculture Workers Union is casting doubts about the direct benefit of the agric sector from the International Monetary Fund bailout program. Speaking to Joy Business, Executive Secretary of the Union, Edward Karuwe, was unsure about government prioritizing agric in its expenditure under the IMF program. He, however, emphasized that the problems in the agric sector go beyond funding.
If history is anything to go by, the focus of IMF deals is not on the agri sector, and I don't think that this time is going to be different. So we should not have so much hope that the IMF deal would necessarily lead to increased investment and support for agriculture. Whenever we have a program of this nature, that the IMF program, immediately you see some semblance of the economy recovering, but it's not going to be lasting. The real causes of our economic woes is not what IMF can address.
That was Executive Secretary of the General Agriculture Workers Union, Edward Karuwe. Economist Professor Lord Mensah is upbeat the World Bank's $250 million support to the Financial Stability Fund will boost confidence in the financial sector. According to him, over the years, liquidity has been a challenge for banks, threatening the viability and soundness of the financial sector. Professor Mensah's comment is coming at a time government has completed the framework that will support the fund, which will take off from July this year. Although the World Bank is yet to release its $250 million seed support for the fund, Professor Lord Mensah has been speaking to Joy Business.
We're supposed to see a boost. In the banking sector, we know very well that liquidity has been a problem, and that is why, turning away from government instrument has been difficult. And we hope that with some of these boosts, they will start turning to the private sector, and that is, the benefit that we look out for when it comes to some of these, economic reforms like the IMF program that we have now. Ensure is that the monies are used for their purpose. And we know, for stabilization fund, we know very well that the DDP has eroded the banking sector's profit and all those. And as a result of that, some of the banks are shaky, and by so doing, they may have to, tap into a fund. So the purpose and the usage of, some of these funds coming into the folds of, our government is what we need to make sure that we need to be concerned of.
You heard economist Professor Lord Mensah. In other news, the independent power producers have justified the take-or-pay deals signed with previous governments. Power purchase agreements with these producers have been described as a major reason for the huge energy sector debts. But Chief Executive of the independent power producers, Elikwilim Apetogbo, insists this is the surest way to attract investors in the country's power generating sector.
When you take any power purchase agreement, which is usually between, let me say, a distribution utility and an IPP, basically we are talking about sharing of risks. The seller has its own risk to protect. The buyer also has its own risk to protect or mitigate. That is exactly what happens in the power purchase agreement. The take or pay contract, as you mentioned, is not a bad contract. What it means is that if I'm available, I have contracted loans to build the power plant for you.
Chief Executive of Independent Power Producers, Elikwilim Apetogbo there. Now, some investors within Ghana's automotive industry are asking government to explore various options in addressing the high taxes causing distress within the space. This, they say, is affecting imports of components for assembling vehicles. According to the Chief Operations Officer of Rana Motors, Kasem Odemat, the prospects for the automotive industry is positive, but more work needs to be done to attract investors.
Automotive business as a whole, all the taxes that are getting imposed are applied on us as well. Because also our business model is not only assembled vehicles. We have also spare parts. We have other components that we sell. Like for example, in our case, we do tires, we do batteries, we do also other components. Of course, there are taxes that have been added in the last 1 or 2 years. Also, we know that the inflation in the country has also, which everybody is facing in the country.
Why don't you push government to sort of have some tax relief to bring down the cost of operations and all that?
Yes, I would say economically things are not in the best shape, but for us as the private sector, we always hope and pray that things will get better.
Kasem Odemat, the Chief Operations Officer for Rana Motors, speaking to my colleague James Ishan. The Ghana Cocoa Board says it would continue to push for fair prices for cocoa farmers on the international market. Now, it follows moves by Ghana and Cote d'Ivoire to influence cocoa pricing after negotiating a $400 living income differential. Now, speaking to Joy Business after the Cote d'Ivoire-Ghana Cocoa Initiative, the Chief Executive of Cocoa Board, Joseph Edu, said cocoa producing countries cannot continue to accept unfair pricing from the international market.
And these are the multinationals, and they normally influence prices of cocoa. And even though you have the International Cocoa Organization, ICCO, is also a body made up of both producers and then consumers or exporters and importers. That body cannot be handling issues for producers.
Joseph Edu is Chief Executive Officer of Cocoa Board. Now, to Investor Eye, and today it is always important to diversify your investments to reduce the risks of losing in a capital market. Let's listen to Director General of the Securities and Exchange Commission, Reverend Daniel Ogbami-Tete, as he gives some advice on how to diversify investments to avoid losing your money.
No matter how good the returns are, you still must respect the principle of diversification. Because if you put all your eggs in one basket and there's a false move, you lose everything. Okay, so I think we need to revisit the issue of how we invest and how we ensure that we avoid concentration risk. What is really happening with this domestic debt issue is that the issuer, in this case the government, had issues. If, let's say, it was a corporate, a company that issued a bond, and it also had issues, I mean, you would also have, and you had invested in the bond. So the point really is, when you are investing, you need to understand who the issuer is, especially if it's a debt instrument like a bond. You need to understand who the issuer is. You need to understand the risks that you are exposing yourself to.
That was Director General of the Securities and Exchange Commission, Reverend Daniel Ogbamitete, with our Investor Eye episode for today. Hope it was helpful. Catch the next episode on Thursday on the Joy Business Report. Before we go, your commodity market update. Crude oil is selling this morning at $76 a barrel after a marginal drop from yesterday. Gold selling at $1,962 an ounce. Cocoa, however, went up by $30, open trading at $3,056 a ton. More news on our website, myjoyonline.com/business. Thanks for listening.